Welcome back to the Collective Shift YouTube channel. I'm your host, Ben Simpson, founder of Collective Shift, and today we have Will from the Mining Store and Imperial Wealth coming on to give us our first crypto mining update. We're going to do these monthly. Will, might be you and I, might be some of our analysts that jump on every month, but it's good to have you back, man, a long-term friend of the channel, and good to see you.
Yeah, thanks for having me, Ben. It was good to catch up with you at the crypto event in Queensland. It was pretty pumping for Australia crypto, so it was a nice vibe.
No, it's good, man. And mining is obviously one of the consistent questions we get from a lot of our members and our followers. And when we sort of discuss it on the Gold Coast, it'd be good to give a bit more of a deeper mining update, which is obviously what you and the team does. It's not really our core, area of expertise. So I thought if we could do a monthly update, it would give a lot of our listeners a good overview of what's going on. I think there's some sort of key points you want to chat on today. So I'm going to hand over the mic to you, mate, and let's get into it.
Absolutely. Yeah, I mean, like a lot of people trade cryptocurrency these days, and a lot of your members, if not all of them, are trading. And I think, as you said, it's one thing that people probably don't pay enough attention to is what's actually happening in the mining market. Even if you're not a miner yourself, it's still really important to understand, what affects mining results and how that affects the market. So, I'll go through a couple of things today. I mean, obviously, I found cryptocurrency through mining. If any of your members didn't know that. When I was younger, built my own computers during high school and kind of through online platforms, learned about Bitcoin mining. You could do it on your computer at the time. Ever since then, it's become pretty much the fundamental part of my strategy. Of course, I do trade cryptocurrencies. I do DeFi. I engage in NFT as well. But the mining part is kind of the core of it. So, I mean, in today's episode, there's a couple of things that I want to cover off for your audience, and that starts at looking into what our Bitcoin mining strategy actually is. We'll then jump in and get a bit of an understanding of the crypto mining cycle, and then we'll jump into a bit of a deep dive where we're up to in that cycle now, and we'll finish off with what hardware is available and what the supply market actually looks like out there at the moment.
Awesome, man. Sounds good.
I'll jump into it after a bit of a drink. All right. So, basically the Bitcoin mining strategy that we follow, I'll share my screen, and I wanted to get this done up by our developers, but they were away over the weekend. That's not a problem. I've just put it on a quick little lucid chart. Just let me know when you can see the screen, Ben. But basically there's kind of four major elements that we focus on with our mining strategy. And reasons why we actually do mine Bitcoin. And it's a long-term income, it's a passive income, it's highly scalable, and it actually forces you to achieve what we call a DCA or dollar cost average strategy. And I know you teach your members about that in their trading skills, Ben. It's really a fundamental part of trading and probably the best way you can give yourself an edge when you're developing a portfolio. So what I mean by a long-term income, when you purchase a Bitcoin miner or multiple Bitcoin miners, you are basically are purchasing something that's going to be mining Bitcoin for around 4 or 5 years. It can be more. The hardware probably would last longer, but by around 4 years, it'll probably be outcompeted and you'll need to upgrade to new hardware. So basically by purchasing Bitcoin miners, which are mining Bitcoin every single day, you're forcing yourself to be in the cryptocurrency market for an extended period of time. Probably the number one reason why we see investors lose, and particularly novice investors lose in the cryptocurrency market, is because they get sucked in when it's all over the news. Bitcoin's at all-time high. They want to make a quick dollar, and then of course it crashes down. And for the next year or two, they're either holding on to losses or they sell out at the bottom and basically take a big loss on their portfolios. So that's the one reason why we always push our members to get into the mining side first. It gives you that prolonged entry into the market. The other reason is it's incredibly passive. Pretty much we have hosting facilities all around the world with very competitive power prices. So you don't even need to buy the miners, set up a mining room, increase your power usage, everything like that. You can actually have them hosted at our facilities. You don't even have to worry about it. You can just watch them mining Bitcoin into your wallet on a daily basis. So it's really important. Too many people kind of get really hands-on with their investments and spend too much time in it, probably overtrade or get frustrated. Bitcoin mining is a very passive way to attack the market. The third point there, highly scalable. you could start with one miner, which can be between $5,000 and $20,000, depending where we're up to in the market. And you could scale that out to a $500 million investment. If it's really something that you're finding a lot of value in, you can constantly just keep adding to your mining farm, and in a passive way. It shouldn't increase your level of management and time that you need to spend on the investment. And awesome. Finally, probably the most important point. Did you have a point there, Ben? Or?
No, I was just going to ask, well, in terms of the hardware needed, I mean, back in the day, you probably didn't need to go out and buy the actual hardware. You could do it through your laptop or your computer. What's sort of the hardware required now that we're sort of progressing, a few years on into sort of the Bitcoin life cycle?
Yeah, great question. I mean, back in the day, as you said, when I was first getting into mining, it was on a computer like I'm using right now. You just have a graphics card, even the CPU, and you're probably pretty competitively mining Bitcoin. We then saw things advance from there, and we basically saw a release of what we call an ASIC miner, which is a computer specifically built to mining cryptocurrency. Back when you're probably talking, you first heard of them maybe in 2017, they were the power, the output is measured in terahashes, and they were hashing, I reckon, around 14 to 30 terahashes. That's increased over the years, and now we're looking at the top of the food chain, I suppose, line model is around 200 terahashes, and the standard model, which is around 2 years old now, is 100 terahashes. So that's kind of, the difference in hardware. Honestly, I don't really see the hardware getting too much, accelerated over the coming years. Already, in order to increase from 100 terahash miner to a 200 terahash miner, it's using pretty much double the amount of power. So they're not really getting a lot more efficient. They're just kind of a bigger and juicier model at the moment.
Awesome, man. Sounds good.
So back to the final part of the strategy, which is that DCA strategy. When you buy a crypto miner, you make an investment. It might be $5,000 into a piece of hardware, and then every single day until that miner dies, or you sell that miner, you're picking up Bitcoin at different prices. So if you had bought one back at the top of the bull market when Bitcoin is 60,000, you'd be mining Bitcoin at 60,000. As it drops down, you'd be mining some Bitcoin at 40, 30, 20,000. You're picking up Bitcoin at different prices, forcing yourself to kind of DCA into the market. As opposed to if you had just bought Bitcoin at $60,000 and then Bitcoin's price starts coming down heavily, you're just holding on to a bit of a loss there. So that's probably my favorite point, and that's why I've stuck to the mining, just constantly expanding out the size of the mining farm. And that gives the audience a little bit of understanding of why we mine Bitcoin, and might interest them into getting into it themselves.
Awesome, man. And just quickly, Will, if you could touch on I know one of the common questions I guess I hear from people mining Bitcoin in Australia is around energy prices. When looking at a normal dollar cost averaging strategy, if we'll just say go buy an FTX or CoinSpot or whatever versus the mining strategy, what do you tend to be your sort of response to that question, particularly let's say in Australia where our audience is predominantly based?
Yeah, 100%. So basically with energy prices, and as we know around the world, they're absolutely skyrocketing. There's a lot that we have done in order to kind of mitigate ourselves away from surges in energy prices. A lot of our facilities are run off hydroelectricity, so they're renewable, and we're not as affected by the kind of on-grid market rate. That's not to say that prices in energy can't increase. Little things such as the US dollar soaring in value, and we pay our energy bills in US dollars, have made it a little bit more expensive for miners, but only by about 0.5 cent. And our electrical rate is between 12 and 13 cents now. So for anyone that kind of is aware of what the electrical rate is in Australia, you're looking at maybe 20 to 30 cents, maybe even more depending on where you are. It's not exactly feasible to mine at a scalable level, or even really mine for profit in Australia. And that's why we set up these facilities. So I guess we've mitigated that risk. We've done the research. We've put a lot of time into thinking where we place our facilities and make sure it's going to be stable over that lifetime of the miner. And I suppose that's why a lot of our members choose to go with our hosting facilities.
Makes sense. Cool.
For sure. So I guess the next bit that we'll jump into, now that we get a bit of an understanding of the strategy that we're following, is understanding the crypto mining cycle. So probably don't need to share screen anymore. I'll just keep my notes up here. But it really revolves around that Bitcoin halvening. So a lot of people and your audience, I know you've talked about it, Ben, you've explained that basically every 4 years, the amount of reward that a Bitcoin miner get actually halves. Okay, so at the moment, it's sitting around the 6.5 or so per block, and every 4 years, that's going to halve, and that basically reduces the amount of new Bitcoin that's coming into the market. And what we tend to see as a result of that is Bitcoin's price tends to have these massive bull runs. So for me, even if I wasn't a miner and I'm just a trader, I'm always looking at Bitcoin and the cryptocurrency market on those 4-year cycles. And it's really important to understand those when you're getting into mining. Pretty much the best time to buy hardware is actually when the daily return of a miner is low. And that's in a market right now. I mean, at the moment, we've got the network hash rate, and we're going to look at the network hash rate chart in just a moment, is at all-time highs, but Bitcoin's price relatively is kind of at all-time lows. So you've got a highly competitive market for mining, but the value of the Bitcoin that you're mining is not as high, and that's leaving our daily return at a kind of the $4 to $5, which is actually pretty good considering that drastic kind of discrepancy between network hash rate and Bitcoin's price. So what that means is right now, if you're looking to get into mining, you're able to actually buy hardware at some of the cheapest prices available ever. At the top of the Bitcoin cycle, where we had, just recently last year, Bitcoin trading at around $60,000, you were paying around $20,000 just to buy one S19 Pro, which is 110 terahashes. Right now, you can buy that exact same miner for $5,000. Right? So the question you want to ask yourself is, can I mine $15,000 of Bitcoin up at that bull run? It doesn't matter that you're getting $30 per day. You want to actually reduce that cost of hardware, mine on it for as long as possible, and then sell your Bitcoin once you get that massive surge in price, and maybe even sell your hardware when you've got those people who are, you don't want to prey on people making bad decisions, but you're definitely getting people that are just wanting to buy anything on the market. And you can obviously offload your hardware at that time, wait for the prices to come back down, and then kind of re-enter the market. So that's kind of the strategy that we follow. We don't expect people to understand it straight away, and that's probably the biggest reason why we offer a free 30-minute consultation for anyone looking to get into cryptocurrency mining. We want to make sure that you understand these principles, that it is actually the right investment for you before you get into it. And Ben, I'll provide your audience with a link there so that they know they're coming from the collective shift. And we can help them out and make sure they're educated before entering.
Awesome, man. No, that sounds great. And I think just even from a dollar cost averaging strategy, like you said, whether you be mining crypto or buying, now's the time to buy and be selling at the top, right? Not vice versa. Easier said than done. But it's pretty stock standard. If you're able to mine, that Bitcoin a little bit cheaper, heading in the next, halving to 2 years out, hopefully going to be set up pretty well.
100%. And it's so important. Like, people get a little bit too sucked in, I think, by all the FOMO and the rest of it. But I'll just quickly show you this chart, just to show you, how, clear it is that the institutional investors or the big capital investors follow this strategy that I'm talking about. So you can see in the black, you've basically got Bitcoin's price. And after the 27 crash, you can see in the blue, you've got the network hash rate, right? And the network hash rate soars on and on and on and on, even when Bitcoin's price is going down. And that's for that exact reason that I'm talking about. These guys are buying as much hardware as cheap as possible price, and then mining Bitcoin. Yes, whilst it's at a low price and their daily returns are low, but as that bull market comes through, as you can see in black and around the 2020, they've been mining for a good 2 years, accumulating all this Bitcoin. As the prices pump through, they're then offloading that, selling it off, and obviously making huge, in hindsight, daily returns, right? Because they sold it at the right price. We're seeing the exact same thing happen right now. Bitcoin's price is dumping, hardware prices are at all-time low, but the network hash rate is pumping up and up and up and up because these institutional investors know how to play the market. They're buying hardware at ridiculously cheap prices, mining that Bitcoin today and looking to sell it on the next run. Really good chart to understand. Network hash rate is something that you want to be constantly looking at, even as a trader. Once you kind of see the prices come up, it'll more than likely because we're entering into that 4 year end of 4 year cycle where Bitcoin halves and the prices will take that run.
And Will, do you want to just quickly explain for some of our newer investors, like what the network hash rate is, like around this, security of the network? Do you want to just sort of explain how that actually works?
Yeah, absolutely. I love, sometimes when you've been in the industry for ages, you take things that are given.
Yeah.
So please do jump in. Yeah, prompt me if there's something you want me to explain. But basically the network hash rate it's the total number of terahashes that are online and competing to mine the next block on the Bitcoin blockchain. Okay. So when things first started out, obviously the network hash rate was ridiculously low. If I go back here, there was only 47 terahash on it before 2012. Today, that's the equivalent of one old generation miner, right? The old computers that we were mining on weren't as powerful, and there was nowhere near as many people on the network. As you get into that kind of 2017 and Bitcoin's price soars to incredibly high, record high prices, and the amount of the value of the Bitcoin that you're getting rewarded as a miner increases, everyone's eyes, peak up, and they want to get more hardware onto the network. So we start getting into around that kind of 28,000 hash rate, where companies are actually producing these specifically built computers to mine Bitcoin. Now we're at that kind of 250 million exahash, which is just, it's a crazy amount of miners that are on the market now. But obviously Bitcoin's price compensates for that. Okay. And just the final point on network hash rate, the thing to understand is obviously if there's only one miner on the market, they would be getting every single block, and they would be getting 6.25 Bitcoin for every single block that they're getting. Obviously, when you buy one miner, you might ask yourself, how am I ever going to win a block? But what actually happens is you join a mining pool, like F2 pool or Slush pool. There's a whole heap of them, Binance pool, and you basically contribute your network, your hash rate to that pool. And every time that pool wins a block, you get the equivalent reward of how much percentage of hash rate you're contributing to that pool. Okay. So you're actually able to get very consistent mining returns on a daily basis. So you can, from probability of how many blocks that pool's winning, you can calculate, I'm probably going to be making between $5 and $10 in this market. Or, if we get into a bull market, it might be $20 to $30 per day.
Yeah, makes sense. Cool, man. Thank you.
No, not a problem at all. So can take the screen share off again there, and then I suppose the final point that we'll go into is just basically understanding the market in terms of hardware and what's available, what models are available. So pretty much at the moment, as I said, the standard S19 Pro, which anyone that's heard a little bit about mining would understand, it comes from the Bitmain manufacturer, which is probably the top manufacturer out there at the moment. That was selling at around $20,000, and they were really, really hard to get in the bull market. That's obviously come down to $5,000 ish per miner, and we do have supply of those miners for people that are looking to get set up. It is getting harder to get hold of any mining supply. So, over the past 3 or 4 months, it's been quite easy with people not being so confident on jumping in the market while things are plummeting. But we're starting to see things kind of level out now, and we're getting bigger kind of orders coming in and people looking to expand, and it is getting harder to get that supply. So we're probably expecting the price of the hardware to come up a bit, as well as the availability to go down a bit more. But in saying that, there is a big institution at the moment that's going through a bit of financial hardship, obviously expanded a little bit too hard during the bull market. The company's called Core Scientific, if people want to Google it and look at what's going on there. And it looks like they may be facing bankruptcy. What that generally means is, suppliers like ourselves will be contacted and asked if we want to purchase the miners, because they'll get put into administration, and we may be able to get our hands on some more supply. I highly doubt it'd be below the $5,000 price anyway. We're pretty close to like manufacturer's price at the moment for these miners, but it could mean that there is some supply and the price may stay at this price for a little bit longer. Hopefully today was a nice educational piece for everyone. If you're interested in Bitcoin mining, I'm going to provide Ben that link. You guys can book a free 30-minute consultation. There's no obligation there. You don't have to feel like you're going to have to buy miners, even if you're just interested in finding out if this could be an investment for you. That's what we're basically here for.
Awesome, man. And I think that was a good little basic session, but moving forward into these monthly mining updates, at the end of each month, the start of each month, so we can go a little bit deeper. And if anyone's got any questions, feel free to ping us a question or drop a comment in the YouTube comments below, or members just ping it through to us, and we can ask Will or the team next time. But thanks for coming on, man. Absolutely. I really enjoyed it. It's good.
No, not a problem at all, Ben. Thanks for having me. And yeah, as you said, obviously, first session we can just refer people back to if they want understanding, and then future sessions we'll be really jumping into network hash rate, difficulty charts, mining strategies, and all the rest of it. So thanks for having me on, and looking forward to the next one.
Thanks, mate. See ya.